This is the question on a lot of Australians' lips at this point in time. When will the RBA cut interest rates? I've got a little secret for you. It's not going to be in 2024 because at this point in time, we're seeing a difference between the Australian government and what the RBA is saying in terms of the next steps for Australia's economy. So in this video, we're going to unpack what the news and media are saying about the interest rate cuts, what the economists are saying, and then what my opinion is on interest rate cuts and how and when it might affect the property market. If you're interested in videos on real estate, renovating, and financial freedom, then make sure you subscribe to the channel down below. And if you're looking for a Brisbane-based buyer's agent to help you buy your own home or an investment property here in the Brisbane market, then head over to purposeproperty.com. Now, let's talk about interest rates. The current interest rate is sitting at 4.35%. And if you jump onto CBA's website, you'll see that they've got interest rates around 6.34%, up to a comparison rate of 6.72%. And if you've got a $750,000 property with a $450,000 mortgage, you're paying $2,798 a month in terms of your current repayments. So this means that the average Aussie is going to be sitting on an interest rate between 6 and 8%. Now, the reason I say up to 8% is one of my highest rates is about 7.74% at this point in time. And as you look to build out a property portfolio, you may go with some second or third tier lenders to extend your borrowing capacity, but you're going to need to pay an interest rate premium to get that borrowing capacity with those second and third tier lenders. And so our lowest rates are sitting around 6.1 to 6.2%. Our highest rates are sitting around 7.7%. And our actual weighted average interest rate, or our weighted average cost of capital, is sitting around 7% at this point in time. Now, one of the interesting things that we've seen happen recently is these fixed rates for the banks. You can see here you've got 1, 2, 3-year, 4-year, 5-year fixed rates. The current 1-year fixed rate with CBA is currently sitting at 6.39%. Now, if the RBA is sitting at 4.35%, what this means is they've added a 2% premium for the bank to make their profit on the RBA's cash rate. And so the banks generally earn somewhere between 1.8 and 2.2% premium. And if you're on those second and third tier lenders, they can earn up to 3 to 4% of a premium, depending on their cost of capital. The interesting thing here is when you change the years. So what we're looking at is 6.29% if we look at a 2-year fixed rate, and 5.89% if we're looking at a 3-year fixed rate. And so what happens is the bank have a lot of smart people working for them. CBA has a lot of analysts looking at these numbers and determining what fixed rates they should present to everyday mums and dads. And so the 4-year is 6.29% and the 5-year is 6.69%. And that's probably because there's a bit of uncertainty for the bank on a 5-year fixed mortgage. Now, with these big banks, they're dropping these fixed rates for typically 2 to 3 to 4 years around that 5.9%, so sub 6% fixed rates. And what that means is the bank thinks that they're going to earn more money and potentially earn well off a 5.9% interest rate for 3 years. So working backwards off what the banks are saying based on fixed rates, and if there's a 2% difference, that would mean that the RBA needs to reduce the cash rate to around 3.9%. Now you've got to remember that it's going to be 3.9% over a 3-year window, and that'll create a 2% disparity. CBA might even be banking that the cash rate might drop below 3.9% to say 3.7 or 3.6 or 3.5, and then they'll actually be making more money off that 3-year fixed mortgage than they would have a variable rate if it's a 2% premium. Let's get down to the basics of what the RBA might do. If you've had a look at what the economists are saying and what the fixed rates currently are with the big banks, we're probably expecting a rate cut in May or June 2025. What this means is we could potentially expect a rate cut of 0.25% by the middle of next year, and then maybe further rate cuts late 2025. CommBank is potentially expecting a cut in 2024, which I think is very unlikely at this point in time. NAB is looking at May 2025, which probably aligns with my predictions, which is what I'm kind of expecting based on the market at this point in time. And then Westpac has potentially said November 2024, and the cash rate eventually setting a lot lower by the end of 2025 at 3.1%. So further cuts well below that 3.6% mark. Honestly, I think people care too much about these rates. I think people are too rate sensitive sometimes. Yes, interest rate is very important. And yes, you need to manage your cash flows and liquidity. And if you were struggling before the rates increased, then you'd be really struggling right now. And so that's why I think a property portfolio should be all about balance. I generally like to go for growth properties first in my own property journey, and then cash flow properties second, and balance out the property portfolio with stronger and stronger cash flow as you move towards your consolidation phase. And I've actually gone through a bit of a consolidation this year in 2024 by selling off the Baby Queenslander located in Everton Park. And I've got videos you can go back through and watch the sale process of that property and exactly how much money we made. And then reusing that capital and liquidity and serviceability with the banks to buy 2 more properties. One we're naming the Bray Park Bomb, which will be a renovation series in January or February next year. And also buying in Shayla Park, which was a recent video I broke down called Watch Me Buy Our Next Investment Property. Both of those purchases are looking to add cash flow in the next 1 to 3 years, but they've also got really strong land components and the ability to add value. And so if you're stuck at this point in time, maybe you need to look at rejigging your property portfolio, selling down one of your worst performing assets. And this is exactly what one of my clients has just done. We're working with a client at the moment who previously worked with another buyer's agent and bought 2, 3, 4 properties with that other buyer's agent. Now, one of those properties I think was significantly underperforming relative to some of the other properties they bought with that buyer's agent. And so my suggestion to the client was to sell that worst performing asset, get back the debt or get back that serviceability, and then reutilize those funds for a better quality purchase, maybe diversify their property portfolio, maybe look to add some cash flow by adding a granny flat on one of their dwellings. And so that's exactly what my client's gone and done. And so when you're looking at the cash rate predictions here, it's about what you can do in your own journey. What's going to make a difference in your own life, because you can't control what the RBA does. Yes, you can keep track of these predictions and when rate cuts might happen, but it's also important to take action on your side of the fence. Now let's talk about the speculation of what might happen to property prices based on these interest rate cuts. Now, if we see a rate cut, which I'm predicting around May 2025, because I think the RBA is going to want a bit more hurt in Australia's economy, then what that might mean is we might see an increase in property prices rather than a decrease if there's a rate cut. What we're seeing is the rich are getting richer because they have the assets, and people who don't have assets are getting left further and further behind. It's just the market that we live in. It's just the way Australia's economy is built and the system that we are playing in. So don't hate the player, hate the game, because the way property is set up in Australia is that assets is where the funds flow into. When cash is printed and money is created, it ends up always falling and trickling back into the assets. And so that's why I want to hold property that gives me cash flow, that has growth potential, and that I can manufacture value by adding granny flats or doing renovations to fast track my property journey. So if we see somewhere between a 0.25 and a 1% cut, or some of the banks are even predicting a 1.5 or 1.4% cut, by the end of 2025, that will mean a boost in borrowing capacity. A 1% fall could mean $10,000, $20,000, $50,000 boosted borrowing capacity for buyers on the low end of property prices, and hundreds of thousands of more borrowing capacity for $1 million plus homes. And so this means that more people will be able to buy. If we continue to have a net interstate migration here into Brisbane, and Australia continues to grow because of overseas migration, then what we're going to see is more pressure on the established property market. And so we could continue to see strong growth in these markets when people think growth might be slowing, because we're talking about the R word, the recession that might be happening this year and next year. Even with all that playing out, property is likely to potentially still grow. Brisbane at this point in time is growing 1% per month, and so that may continue for the next 1, 2, 3 years if we continue to see these market factors at play. Now, what are your predictions in terms of interest rates? And do you think the government and the RBA should be doing more to help property or keep property prices stable and not growing as quickly as they are? I'd be really interested to hear your thoughts on rates and what we should do in terms of the Australian property market to make it more affordable for first-time buyers and still to create wealth through property investment. I'd love to hear your thoughts in the comments below. If you're looking for a Brisbane-based buyer's agent to buy your own home or an investment property here in Brisbane, head over to purposeproperty.com.au. We also have a course over there, or you can keep consuming this free content here on YouTube. And so YouTube really thinks that you're going to like this video over here, so make sure you give that a click, and I'll see you in the next one. Peace.